G'day everyone, it's Sydneyoptionstrader looking at the halfway back trading method, and we're going to look at an example today on IBM. It looks to be in an opportune position for us to create a decent risk reward trade plan with the help of options. Now normally we don't look at specific stocks, we look at indexes, ETFs, currencies, because they are bigger markets and they are more likely to have programs attached to it. But with big issues like IBM, we can see that there are a few stocks that do obey the halfway back, and certainly, just looking at the weekly or even on the smaller time frames like the hourly, you can see the integrity with the halfway back. I mean, just even looking say at this approach here, where there was a long trend retracement, buy at the 50%, hit at the 23%. And I mean, you can follow that whole way up. There's halfway backs, extensions in between. But the nature of what we wanted to do here is find the bias of IBM and then create a attractive risk reward profile for a trade plan. So heading to the daily on IBM, and we're just going to take a look at this last couple of months, and we had a big sell-off here with the advent of that particular earnings. Now, looking at this sell-off and then subsequent bullish action, one would think that that buying had some intention behind it. And if we go from these levels here, we get a 50% buy from the highs, which gives us a target of 145.93. Now, if we look at that, we're pretty much in the middle, so it doesn't actually give us a very nice risk reward. But if we head down to the hourlies, you can see here that a very interesting point, drawing from highs to lows. We have a retracement short that has its 618 tested but not broken. We have some buyers step in here. The 618 is tested again. We certainly don't have any large 50% buyers, sellers at this point, which would send it down to its negative 23% target on this short. Instead, we have a break. Now, it's only a small break. It's not a big enough break for some. For me, it's good enough because it's a retest. I can understand with the stocks it is a little bit hazier. But if we look at the other clues as well, you can see that here from the lows to the highs, that corresponds with the buying, which sends it higher, which has a target here beyond the 618. Now, on the short-term time frame, even smaller than that, you can see that there is another halfway back that is bought here. Now, yes, there is also an opposing that is sold there, so we're getting battle zone within battle zone. 618 within 618 is going to be resolved very quickly. You can see there's a triangle forming. So which stop to choose on the short term? If we look at the Analyze tab, you'll note that we can set up the expected move just one day, and you can see that that expected move takes us down to about 138.28, 138.25. Now, if we use this as a 618, as our stop. It's inside the expected move for one day. It's really not giving it enough latitude. The possibility of being stopped out is quite high. Whereas if we go down to the 138.22 here, we're giving ourselves a little bit more latitude for it to fluff around, for it to be in sideways motion, but still stay in the trade. Give us a bigger chance to hit this 145.93. So in setting up this trade plan, you can see that we've gone for the highs of 145.93 as the target and the stop of 138.22. Now we sold 3 140 135 put spreads in November, and we bought 1 140 call, and you can note here that within that range the white line is below the red line, which means the longer the trade goes, the more profit comes in our favour, or the less loss we suffer if the trade goes backwards. Now, entering that trade is quite complex, but we can set a 1 triggers OCO. We'll do another YouTube on that at another point. Obviously I'm not recommending this trade, but it is a good example of how we can use the halfway back to turn an average risk reward profile into quite a decent risk reward. You can see here, managed risk 187, max reward 822 tomorrow, or 953 at the end of the month. Hopefully this was helpful. Thanks so much for your comments. We'll try and work through the issues that you bring up to make this system a little more clearly for you.